Hello everyone, a good evening. This is Silent again with another market review and commentary over today's price action. We're looking at the NASDAQ September contract for 2025. Starting out with the weekly chart. As you can see, we started the week off and immediately started drawing down into our mean threshold level, 23,310. Swept down under that and got some liquidity. Started drawing back up towards the end of the day there. Right now, we're still looking for lower prices. Let's drop down to the daily chart. Again, I drew your attention to this sell-side imbalance and daily order block level. We traded up on the open, and yesterday's price action during the holiday, we traded up and missed the constant encroachment level of the daily sell-side imbalance there and began selling off. Going into tomorrow, I'm watching this daily buy-side imbalance. I don't have it marked in the chart, but I'll be looking at that area tomorrow. 4-hour chart. Again, we're looking at this breaker block on the previous commentary there. I wanted to see this gap here stay open. They opened up on Sunday and traded up into there just by one tick, so institutional order flow entry drill there. The remaining portion of majority of that gap left open there. Traded down and almost closed below the low of that breaker there. Opened and closed right near the low of that breaker, and every candle afterwards during that holiday just stayed inside the breaker block. And finally we open at midnight here and get a candle closure below that level here. Trade up into it one more time for good measure. Call it over top of the opening price at midnight today and just sank it all day into our sell-side liquidity target that we were looking at on the previous episode. Stabbed down in there twice, couldn't get a candle closure below just yet, and third time failure to sell off there and just retrace back into the SIBI on the close of the day. Looking at the hourly chart, I wanted to refine and look at what was going on during yesterday and to give us that confirmation we were looking for to finally see that sell-off for today. We understood yesterday was a half day and closed early because of the holiday. So given some inherent price action here, we were able to gap open on Sunday and just barely nudged that gap level, which is the same as the 4-hour sell-side imbalance, and then broke down aggressively, left the imbalance right there, which was nice because we got the market structure shift and the imbalance behind it. So any trade back up into that range was a sell, and in preparation for it to finally break down and go below those rejection block levels. From the 4-hour chart, we trade up into the SIBI one last time and break down, creating an imbalance again, and just began stair-stepping down into the low of that breaker block and into the sell-side liquidity. And it's been a little bit of time before finally breaking down with a larger imbalance as London began opening there and trickled down all day during New York. And finally a nice pump back up into 4-hour imbalance there. I'm watching for the open today is what we're going to do with this imbalance level. If we can gap down and start trading back below the constant encroachment of that imbalance level, we'll be looking for another sell-off. 15-minute chart capturing yesterday and today's price action. Nothing new added to the chart. We just brought down levels from the higher time frame. There's that 4-hour sell side imbalance high. Tagged that a couple times, and notice how there's not really any significant candle bodies closing above that level. So every time we tag it, it just sells off, and then tag it one more time, and finally create an imbalance in this price swing. So after this happens, everybody in our group of understanding is going to be looking for lower prices after that. So any rally up in here is to be sold. Same Wednesday south side imbalance that we were looking at on the market review for some extra credit there. I left that for you guys to study. Broke down through it and then used the low as a premium array for the sell-off going into the New York session. 5-minute chart. I broke down a market maker sell model that we were delivered today and had the opportunity of working with on the open of today's New York session on the NASDAQ. I have the Forex Factory, took a little screenshot of the news calendar for today, and the high impact news we had today was the PMI release and 10 a.m. So I want to break this down a little bit. So we have 7:30 and 8 o'clock. So New York open here, we break down and begin trading lower until we get to the 9:30 open. 9:30 sweeps below some recent sales of liquidity and breaks higher with this shift up with this high here and closes above it right on the open. Pretty strong open there, so immediately we'd be looking for that imbalance and this buy side to be purged if we were looking at this on the open. I was able to catch a little piece of this move myself, and it trades up into this buy side liquidity here. So we have a sell side purge, a shift in structure with a gap that's been left open. Trades up, leaves this gap open again until we reach into our buy side liquidity level, and here's the news release. It forms a smart money reversal right at the 10 o'clock time window. We begin trading lower, completely fill up this imbalance here that I do not have marked, and finally trade back down into the buy side imbalance on the buy side of the curve here. And so when we're bearish on the day and we see a rally up like this, our mind is immediately going to be waiting for another shift lower because our bias is short. We saw a rally, we have gaps being left open, so we're waiting for price to trade lower and hit a discount array. And what we do with that discount array is indicative of building a narrative for the sell-off that we'd be anticipating in the same direction as our daily bias. So we hit this imbalance, it trades up, tags the rejection block here and closes. We open, trade lower, cannot trade below most recent low again that tested this level, so it sends it up one more time into that rejection block there. This opening price and the closing price here trades up, as sort of a failure swing. We don't know that yet until this candle closes. So we're just testing to see if we're going to be able to start changing the tide here and go under our daily bias. So we're waiting for the structure to change. We're seeing our last indication of a rally, which begins to fail. I took a measurement from the opening price in this candle and the high of the long wick from the news event, split that in half, and price stays below the lower portion of that range, and begins closing candles lower. And until we get closure below this or retrade below this level, it's not really showing us a confirmation of going bearishness yet, until we get finally a break lower, which closes strongly below the level that we were looking at to give us our first indication of a market structure shift. We get a closure there, and then price trades up and begins respecting the lower half of this imbalance. So when this happens, we get a closure below, and we're trading it back up into test it. We're watching to see if price can stay inside this imbalance, first of all, because we already have the backdrop that this is creating a gap. We just open here, and the gap currently would be in this range, and until we close again, we won't know. So we're anticipating this to show resistance in order to form this fair value gap here. So we don't want it to trade up too high, because we want that gap to be there. We close again significantly lower and leave another gap there. So we got all of our confirmation that we're looking for that this is going to be a shift. So any retest of this level, this sell side balance, and up into this inversion fair value gap, we're going to be looking for a sell-off. And we're paying attention to see if price can stay outside of this gap. We have the backdrop of this forming a balanced price range, and when we trade up into it and see that sell-off again, we basically confirmed that this is a balanced price range and that this gap should be a breakaway. So we have imbalance form here, imbalance form here. Price retests the level here and shoots up one more time for good measure, but stays below consequent encroachment of the balanced price range, and then finally closes lower. This is all of our signs that this is going to be a sell-off, right? So we could be entering as soon as it tests the imbalance here, or we can be watching to see how far into this SIBI it's going to trade into, and if it overshoots the SIBI, we absolutely need it to stay below consequent encroachment of the balanced price range. So this is a sell, and anything in here is also a sell-off. A sellable trade. We break down another shift of structure down below here, and any following retests of this range in the wick here, it's met with the sell-off. So from this sell side balance down to the breakaway gap and into the sell side liquidity below this candle body's lows here would be a price target. So selling here, taking a partial in here, waiting for it to trade down into this wick, take another trade off here, more partials, and then kind of hold on to something there, a little bit of piece, maybe 1 micro or 2 micros, to see if it'll run below the low, but it never does. Eventually would have gotten trailed out after it overlapped this sell side imbalance here twice. And then finally going back into the range here, and eventually price trades up above this high again later on in the day. But I want you to pay attention to gaps that are left open on buy side of the curve and gaps that are left open on the sell side of the curve. Usually those are kind of strong draw and liquidity levels. If price begins retracing and decides to do a reversal, this would be a more significant draw on liquidity later on. And if you look in your charts, this gap does eventually get traded to later on, but we're just taking a snapshot of the open here, and this is all you would need to be paying attention to during your trading day to get paid, okay? We don't need sell side liquidity below lows to be hit in order for us to get profitable. We just understand that there's sell side liquidity inside wicks and below rejection blocks, so we measure half of that range, and we would be watching to see if price can snap under, just like we do here, respect the lower half of the range, but it never does. We begin disrespecting and overlapping previous premium arrays, so it's telling you that pretty much a run on constant encroachment was good enough of a drawn liquidity for the market to be satisfied at that time. Dropping down into the 1 minute chart, there's not really anything else to add here. I just wanted to allow you to be able to see a fractal view, kind of pull the microscope up a little bit and see what price was working with inside that 5 minute fractal. We have the run on liquidity, sell side purge, right on the open at 9:30. We invert this fair value gap here and then break higher, and price is unwilling to trade back into this range because it's balanced. So we left this 5 minute gap open, reaccumulate into this order block here, send price higher, finally meeting that buy side liquidity purge that formed in the pre-market. Does a smart one reversal here. This is your first indication of a market structure shift, and no high higher than this one is put in after this range is completed, pretty much. Okay, so after this market structure shift, there's never a higher high than this high until we reached our drawn liquidity for the sell side of the curve. Trying to see if there's any other interesting structures here to talk about, and really there's nothing that significant in here. After the smart money reversal, there's a little consolidation here and no displacements lower, so it's already telling you that, hey, even though we have shifted structure bearishly, because there's no sell side imbalances here, it just means that price is not quite ready to sell off yet. And actually what happens is kind of a smaller idea of what's happening on the 5 minute is happening kind of in this area. So it leave this gap open, trade in a buy side, break down with a gap gets overlapped, and then rallies up, it takes out buy side one more time, and then finally creates that lower high idea here on the 5 minute, shown on the 1 minute chart. We get the lower high here, break down, market structure shift with the imbalance. So we're finally beginning to get imbalances in the direction of our bias. That is significant because it takes out buy side liquidity first, not just once but twice. So it takes out liquidity here and here, and then finally breaks down, drag this imbalance over, buy side of the curve imbalance over, and you'll see price respect the lower half of the constant encroachment level of this imbalance, and then finally cascades lower, creating this 5 minute breakaway gap. Spend some time inside the balanced price range, it's giving you retests of the balanced price range before it finally breaks lower and creates that secondary SIBI on the 5-minute chart that gets tested with candle bodies and finally breaks lower again. Standard fair value gap entry here, and just continuously produces bearish institutional order flow until liquidity on the sell side of the curve is reached and is satisfied for the day. Alright, so that's going to be it for me. I will talk to you guys tomorrow. Don't forget to comment, like, and subscribe. Let me know how you got along with this video. I'll talk to you again later.